Greed. It's the oldest and most powerful force in finance. It's the whisper that turns smart investors into gamblers. It's not just about wanting more. It's the irrational desire for wealth so intense that it overrides logic and reason. It's the engine behind every speculative bubble and every market crash. We see it when investors pour their life savings into a hyped-up stock without research, driven by stories of overnight millionaires. They're not investing in a business. They're buying a lottery ticket with their future. The antidote to greed isn't poverty. It's a plan. Having clearly defined financial goals and a disciplined strategy is the only defense against the emotional pull of more, faster. In Part 2, we'll expose the next deadly sin. Subscribe so you don't miss it. Your neighbor's new car might be the single most expensive purchase you ever make. This is the financial sin of envy. Envy is the engine of lifestyle inflation. It's the pressure to keep up with the Joneses, causing us to spend money we don't have on things we don't need to impress people we don't even like. Social media has weaponized this. We see a friend's vacation or a colleague's promotion, and our own financial progress suddenly feels inadequate. This can lead to impulsive, high-cost purchases to close that perceived gap. The only defense is to run your own race. Your financial plan should be based on your goals, not someone else's highlight reel. In Part 3, we'll explore a sin that's far more subtle. Subscribe so you don't miss it. The most expensive financial sin isn't a bad investment, it's no investment at all. This is the sin of sloth. Financial sloth is the paralysis of inaction. It's knowing you should start investing, open a retirement account, or make a budget, but constantly putting it off until later. But later has a cost. Thanks to the power of compound interest, delaying your investments by just a few years can cost you hundreds of thousands of dollars in the long run. Inaction is an active financial decision, and it's a costly one. The antidote is automation. Set up automatic transfers to your investment accounts. Make your default option the smart one. In Part 4, we'll tackle a sin that affects the most confident investors. Subscribe so you don't miss it. Your ego is your portfolio's worst enemy. This is the financial sin of pride. Financial pride is the inability to admit you were wrong. It's the force that makes an investor hold a losing stock all the way to zero, because selling would mean admitting a mistake. Pride also prevents us from asking for help. We're too proud to admit we don't understand a financial product or to seek advice from a professional, leading to costly, unforced errors. The antidote is humility. The best investors have strong opinions, weakly held. They understand that being profitable is more important than being right. In Part 5, we'll explore a sin of desire. Subscribe so you don't miss it. Why do we chase complex, exotic investments when simple ones work better? This is the financial sin of lust. Financial lust is the desire for the secret or sexy investment. It's the belief that there must be a complex strategy that the gurus use, and that simple index funds are for amateurs. This leads investors to chase complicated products with high fees and hidden risks, often with worse results than a basic, low-cost portfolio. Complexity feels sophisticated, but in investing, simplicity is often the ultimate sophistication. In Part 6, we'll tackle a sin of overconsumption. Subscribe. Your daily spending habits might be eating your future alive. This is the financial sin of gluttony. Financial gluttony is overconsumption. It's the mindless spending on things that provide fleeting pleasure but have a lasting negative impact. It's the death by 1,000 cuts from daily coffees, lunches out, and subscription services you don't use. This isn't about never enjoying yourself. It's about the lack of intention. Each small, mindless purchase is a vote against your future financial freedom. The antidote is mindful spending. In our finale, we'll explore the most destructive sin of all. Subscribe. The market drops 10%, and you feel that hot surge of anger and panic in your chest. This is the financial sin of wrath. Financial wrath is emotional decision-making at its absolute worst. It is the panic selling at the market bottom that locks in your losses forever. It is the revenge trading, making a series of reckless, high-risk bets to try and win back money you've lost, which almost always leads to even bigger losses. Your investment strategy should be boring. It should be a set of rules you created when you were calm and rational, specifically designed to protect you from your own emotional impulses when the market inevitably gets chaotic. This concludes our series on the 7 deadly financial sins. Subscribe for more.